please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. I'm Sumaira Abdi and with me is Lata Venkatesh. Lata, good afternoon to you. Though I'm hoping the afternoon could have been better, but yeah, there's lots of news flow. A lot of it global in nature. We have some our own domestic news flow as well coming in from agencies regarding Fortis. But just to check on the global picture, because our own market, we're a little bit off the lows, but still down about 150 points in the Nifty. The Sensex is down about 460 points. But importantly, we've seen some bit of a reversal in Hang Seng. So at one point it was down over 700 points, now just down about 500 odd. Dow futures are trending in the green. So let's see if the day will hold much more hope from here on, Lata.
Yeah, I mean, that's what it looked like. We started gap down, but not as bad as the SGX Nifty indicated. So one feared that this not so big a dip will get only sold into, but that didn't happen. The dip has actually gotten bought at this point in time, and you've got the FTSE futures also up on your screen. Those are indicating that the cut is not as savage as they went through yesterday, and therefore there could be a bit of perhaps stemming of losses, stemming of the erosion in India as well. But let's first apprise you of the top headlines, and then we have this very important CNBC TV18 exclusive that will come up for you on Fortis, because we've got a huge CNBC TV18 exclusive with the resignation of the promoters from Fortis Healthcare. A deal to sell Fortis now looks imminent. Nisha Podar is here with who the prospective buyer could be. Morning, Nisha. Tell us.
Good morning, Lata. So sources with direct knowledge, and I've been speaking to several participants who are familiar with the developments at Fortis Healthcare, and they have been suggesting for a while now that Manipal Hospitals is really taking the lead, backed by its big private equity firm TPG, to merge Fortis Health with itself. Now, many legal eagles have been working on this particular transaction, that how can they really go ahead with it despite Supreme Court barring Fortis Healthcare promoters really selling the stake. So the actual verdict of the Supreme Court said that the inherent value of the shares cannot be tinkered with. So going ahead with that, circumventing that particular verdict, what the legal eagles have really suggested in this particular deal is that a primary infusion of funds and a merger cannot really violate this Supreme Court verdict. So therefore, what they are likely to do, and they're in advanced talks for this, unless some new legal hurdle really comes up, is that Manipal Hospitals, backed by TPG, could be merging Fortis Healthcare with itself. Their SRL is included or not is still a question mark. On the other hand, there could be primary infusion of funds so that Manipal Hospital-led consortium is the largest stakeholder, is the controlling stakeholder of Fortis Health, while the Singh brothers, who have now quit from the board of Fortis Health to let this process go through, could be holding a minority stake in the overall combined entity. So therefore, their value of shares, inherent shares, do not change, but on the other hand, the deal can really go through. So that's what I'm gathering from sources.
It has to be a reverse merger, because this is the listed stock and Manipal is the unlisted stock. So it ought to be at least from a reverse merger. But before I come to you again, now the exchange itself has got a clarification, it looks like, from Fortis on the lines that the agency reported. The exchange has sought clarification from Fortis Healthcare with respect to news item captioned, looks like there is a lack of corporate governance in Fortis. Deloitte refuses to certify Fortis second quarter results. The Singh brothers said to have taken out 78 million. In this regard, the exchange has advised the company to provide clarification on the news item in detail, including the following: whether such an event, negotiations, article stated in published news is taking place, and if so, you are advised to provide the said information; whether the company is aware of any information that has not been announced to exchanges. So exchanges have just taken cognizance of what the news buyers reported, and they have asked for clarification. But Nisha's story, of course, is very different. A potential buyer in Manipal Hospitals backed by TPG, and a possible merger. So that will have to be a reverse merger.
that has to be a reverse merger, and Manipal Hospitals could really become a listed entity, being the controlling shareholder of the merged entity. But here, Lata, since there are so many legal tangles really attached, and Daiichi Sankyo had not been leaving any stone unturned in blocking these transactions because clearly they are not getting their money, well, clearly we'll have to see how their legals really respond to this particular, stunt by Fortis Healthcare as well as Manipal Hospitals. So we'll have to see whether the Supreme Court verdict is at all going to really be an overhang in this. But they have really taken all the precautions so that legally it can be a smooth process, and clearly the resignation of Singh brothers, the promoters of the company, yesterday was a precursor to smoothen the process for this particular transaction.
All right, thanks a lot for that, Nisha. Well, that's a great deal on Fortis, and all that has kept the share hydrated. It's a day of big results as well, so we are going to analyze some of the numbers which you should keep in mind. First up, of course, will be Tata Steel reporting its third quarter numbers. SAIL, of course, came into profit after 10 quarters. The other steel biggies have already done that long back. They've been reporting decent numbers. Nigel joins in with the key expectations from Tata Steel. Nigel.
Well, it'll be a good set of numbers coming in from Tata Steel in today's trading session. Top line growth of around 10%. We'll see margin expansion of around 250 to around 300 basis points. And the profitability as well should come in at around 1,400 crores. That's what our poll threw up. But that's where all the unimportant numbers really end. The important numbers really are going to be the geographic breakup. Firstly, these numbers are going to be driven by higher volumes as well as higher realizations. Remember, we have seen a big surge in terms of domestic as well as international steel prices. And we have the provisional sales numbers. They have come in higher by around 6% at around 6.33 million tons. The higher input costs, though, they'll negate some part of the gains, particularly in the European operations. Focusing on India first, so there the sales volumes we already have. They are coming higher by close to around 10%, so that looks good. Remember, the Kalinganagar unit has been ramping up, so that's what's aided the top line. And in fact, in terms of an EBITDA per ton, we are working with a number of around 11,750. That's going to look good because it's going to be helped by better operating leverage. Why does the EBITDA per ton increase? Operating leverage plays out. We have higher steel realizations as well, and they've been focusing on value-added products. So that explains why, in fact, the steel business will look good. We've been talking about coking coal as well as iron ore prices spiking up. Well, Tata Steel is protected. They get all their iron ore from the captive sources, and in terms of coking coal, 35% approximately is what they get from the captive sources, so they are protected. The European operations, though, there we're looking at volumes of around 2.4 million tons. The provisional numbers are already with us. Though in terms of deliveries, they could take a bit of a knock because of the seasonality factor. That's winters as well as holiday season will play out. In terms of the European EBITDA per ton, this is going to be quite interesting because we are working with a number of around $55 on a per ton basis. Some brokerages even estimate $80 per ton, and some are at around $45 per ton. So there's a wide range there. We are going with a number of around $55 per ton. It's not integrated, so it gets a bit of a knock because of the higher raw material costs. Southeast Asia as well, we've seen a bit of a decline in terms of sales volumes, though that could be helped by steel realizations. All in all, these numbers should look quite good. Management commentary extremely crucial.
Oh, all right, Nigel, thanks very much for that. Now we know what to watch out for in Tata Steel. But on the other hand, some earnings reactions have also been coming through, and amongst them is Petronet LNG. So they've posted numbers which are broadly in line with the street estimates. Anshu Sharma caught up with Prabhat Singh, the MD and CEO of the company, and began by asking him what drove their earnings this quarter.
We are fortunate there is demand in the country and people are pushing for volumes. All we have done is that we've been able to keep our terminal running, and capacity utilization we've been able to give to the consumer. So quantity wise, yes, we've been the highest. But if you say profit wise, etc., definitely last quarter we had done better. But this quarter is around 10% lower, but still it's a good number for us because on an overall basis, when you see last few years of performance, this is a good quarter.
How are the spot volumes and marketing margins for this quarter compared to the last year?
No, last year we have actually made around, in terms of profitability, let me just check. We have done around 33% higher in terms of profit after tax and 47% higher in terms of profit before tax.
Okay.
So that's it. I'm saying that volumes are the highest, but even profitability compared to last year has been reasonably very good. But when you look at it from the last quarter, we are 10% lower. So that's it.
So how's the utilization at both the pipeline and Dahej and Kochi?
Dahej, the terminal has been utilized at 113%. Kochi, it is only 12%. So on an average basis, if you take both the terminals together, it's around 88% capacity utilization. So we are happy because Kochi at least is making operating profit, and we are now looking forward to the gate pipeline coming up. So once that comes up, the utilization of Kochi also should go up to nearly 40% or so. So that will give us good profits from there as well. Dahej has always been the darling of the industry, and we are very happy to be a part of that project.
Coming to the foreign business, what is the status on Bangladesh, and which are the new businesses that you're looking to enter, and what will be the details?
Bangladesh, we've suggested a land-based terminal which is 7.5 million tons of LNG regasified, and project is going to cost nearly around $1 billion plus. We have at the working level more or less concluded all the commercial discussions, perhaps one more discussion commercially at the top level, and then they have a proposal processing committee which actually looks at the volume projects. So we feel that within February or at best March we should be having that proposal processing committee, and once that happens and it is cleared, then that's it. We are into a project, and we'll go ahead with bringing it to the board, getting formal approvals, and then starting the execution part.
You mentioned in the press conference about venturing into Sri Lanka for a pipeline project. What are the contours of the project, and how soon can we expect an agreement to be signed on that, and what will be Petronet's role in that?
We are actually leading a joint venture there with the Japanese and the Sri Lankans. We are 47.5%, Japanese are 37.5%, Sri Lankans are 15%. So as lead, we feel it will be a $300 million project approximately.
Petnet LNG, one of the best performing stocks of the past 15 months. Well, from oil and gas, let's get to earnings from oil and gas companies that are due today. From the Nifty pack, of course, it's ONGC. Expected to report a good quarter for the same reasons as LNG, very good crude prices. Naveen, you tell us what would be the key expectations? What are you looking out for?
So Lata, certainly as you pointed out, we are expecting a good quarter from ONGC given the fact that the hike in the crude oil prices as well as the volume in both crude as well as the gas. Also, what is working for ONGC is the valuations currently at a historical low of around that 8 times FY20 multiple. So that is also clearly in favor of ONGC. Now talking about the numbers, revenue growth, we are expecting 21% year-on-year growth, majorly led by the volumes in the gas segment as well as the realizations. On the other hand, margins are expected to jump by close to 100 basis points, around that 56% mark. PAT is also expected to come at around that 6,200 crore rupees. Now, what are the nitty-gritties that we need to keep an eye on? One is the most important number, that is the net realization for crude. We are expecting that to come in at around that $61.9 per barrel, a jump of close to 22% on a quarter-on-quarter basis. Apart from this, volumes are also expected to increase for gas as well as the realizations. But the most important number is the net realizations at around that $62 mark, which will drive the overall consolidated earnings. Expect a good quarter for ONGC. Back to you.
We have about 480 points in terms of a cut on the Sensex. The Nifty is down 150 odd points, so we're still down about 1.5% on the frontline indices. But the Dow futures at this time has turned positive. Ashwini Gujral and Sandeep Wagle join in with fresh ideas. Good afternoon, gentlemen. Ashwini, first to you. There could possibly be another wild ride ahead of us in terms of the US session this evening. What's the advice then on the index in terms of intraday, and perhaps how would you look at positioning for the weekend, ahead of the weekend?
See, there is some short covering visible because the Nifty was trading at a 10-point discount. Now it's at a 4 or 5 point premium. Now I would think that this is the time to cover your shorts and possibly get long intraday, because if any of these banks or all of these banks gain $2-3 each, the bank Nifty will scream higher by 150-200 points, because beyond a point, the bank Nifty is not able to make fresh lows, and neither are these banks going lower, with European futures higher, US futures higher. a bit of short covering is likely to happen as we go into the close. Now, the range of 10,300 to 600 stays, and you know, Monday again you have to see whether we are closer to 10,600 or 300, but chances are we are at the lower end of the range. So even on a positional basis, I wouldn't mind carrying home a Nifty or a Bank Nifty long position, because we've already had a slam dunk, and chances of a recovery are much better than a further sell-off on Monday.
So would you say that your confidence in 10,300 as a near-term bottom is reinforced now?
Well, today was the day to take it out.
Okay.
And if we haven't done it till 1 o'clock, then, you know, everybody starts to get jittery, whoever has short positions, and runs to cover. And basically these large banks, which are down 3.5%, 3%, 2.5%, if any one of them turns green, you know, there'll be a fire of short covering, which happens on the Bank Nifty.
Okay. We'll come back to you, Ashwini. Sandeep Pagle is with us. Sandeep, what are your stocks?
Afternoon, Lata. I would go with a sell in an Axis Bank, stop loss of 561, target of 531, and a buy in a Castrol, stop loss of 192, target 204.
Okay. Well, Ashwini, you said that even in positional, as in even if you're carrying it forward for Monday, but what about a slightly more, say, a player for the whole contract, the March contract? Would you say that those guys can retain shorts?
See, if you, March contract is next month, so that probably is not in the picture. February contract, you probably went short on the first day that the Bank Nifty fell. For them, the stop loss is yesterday's high, which is about 26,200. What we are talking about is that you get a 500-point gap down, and there is a bit of short covering, and you make some money, not from the contract perspective. Maybe Monday could be another up day because we are inside a range, but not much more than that.
Fair point. Any other stocks that you would trade?
See, Asian Paints is finding buying, so that's a buy with a stop of 1100, target of 1220. Britannia is a buy with a stop of 4600, target of 4730. And real estate has come back very strongly, so maybe Soba can have a nice second half. That's a buy with a stop of 565, target of 590.
All right, gentlemen, thanks very much for your trading ideas. Yes,
no, Ashwini, I was just wondering if I could squeeze in one more. Is there any idea in SAIL or any of the steel stocks?
See, these are high beta plays. So if the market starts to cover shorts, I think even metals will go up. Metals and realty are the two spaces which are higher. So chances are what is higher right now and the market picks up, they will likely move much higher. As I speak, Kotak Mahindra is hitting now highs of the day. So slowly, you know, all of these banks, if they get to the high point of the day, I think there'll be much more upside we'll be able to see.
Fair point.